Okay, it's Monday, June 11th, 2018. It's just a few minutes after 9 a.m. New York time, so stock market's going to open in about 20 minutes or so. Before we get started, uh, so this is what I'm looking at. I've been watching price bounce around back and forth here. This is the euro dollar 1 hour time frame, and this is sort of preparing me for these possible reversals. So I can see some signals, and then I see these little reversals. And it's easy to get sort of caught up in it, especially after some economic data like the UK this morning, and after that strong drop, it sort of stopped. I'll talk about the pound dollar in just a moment here, the way I see it. But I've got first of all a few things to pay attention to when I start. So this is the euro dollar. This is last week's high. All the way down here is last week's low. So I really don't need to pay attention to it right now. I just need to know where it's at because later on in the week it might have some sort of price might have some sort of reaction to it. But right now, I also want to be aware of today's fulcrum or the pivot point, the center here in the pivot points. So that is at approximately 1.1768 or 69. And I've got a price alert down here at this support level from that pullback on Friday. But overall, I think it's just going to be one of those Mondays where things just go relatively sideways. Stock market's going to open up in a few minutes, about 20 minutes or so, as I said, and things are in a relatively narrow, sort of flat range. So it doesn't really surprise me. And I'm going to show you the dollar and the Japanese yen futures too, because I've been watching the dollar yen as well. So this one, you get an evening star pattern, and then you get a morning star pattern, and they really don't go anywhere. So as I see these things developing, the first thing I see is that if there isn't enough confirmation and I can't determine that there's going to be enough participation where price would move significantly to a specific price target, then I'm going to stay out of it. And this is exactly why. So I'll show you just for an example. It's easy, and I'm going to detach this. It's easy to go back to this particular candle here, this pattern, and see if I can get it right on that one there. So you can see that it's not only an evening star pattern, but it's also engulfing, it's a 1 hour time frame. I consider the 1 hour a pretty significant time frame. I trust that one a lot more than I would maybe a smaller time frame, unless I'm using the smaller time frame for some other purpose. But as far as getting into a trade and taking a specific target that's going to pay me 20 pips or more, I'm not really interested in scalping at this point. And that's the way I look at it, is that if I'm going to trade inside of a range like this, at this time of the day when this developed, and then I cannot determine that it's going to move to a pretty significant support level or a price target, then I'm going to stay out of the way. There's not enough volume at that time. Knowing what day it is out of the week, again, a Monday, very often Mondays sort of move sideways sometimes. I say that in a hesitant way because it doesn't always happen. Sometimes we get great breakouts. It's not. I'm not saying that every Monday is a slow day. It's not, but usually it will work out like this. So when I see these patterns, one of the first things I say to myself is, well, if I can't see enough participation, I don't see enough volume, I don't think it's going to go down. Let's just take, for example, where this one closed. This is the euro dollar 1 hour time frame, and this one closed at 1.1783. Well, using an entry of 83 in a range like this, I would target psychological levels. Getting in at 83, obviously 80 would be one of my psychological levels to use, but that wouldn't make any sense, right? From 83 to 80, that's just scalping. I mean, that doesn't make any sense. So 50 would be my target. That's where I would expect price to go as a price target if I was going to trade this and sell it. Now, if this would have happened and set up that pattern that we're looking at right there with enough volume, confirming dollar futures, and with economic data, let's say at 8:30 New York time or 10 o'clock New York time, then I probably would have considered selling this. But I would have been very cautious as it's approaching this pivot point, because sometimes it'll move a little bit lower and then bounce. We've got some of these moving averages moving in here. But again, this is 50. This is what I would use as a price target, the 50 psychological level, right there where my crosshairs are. That would be my take profit level. So again, if at the time this is setting up, if I can't determine that it's going to move to the 50, then I'm just going to stay out of it. And I use these 50, like the 50, the 20, and the 80. I use those psychological levels, including the double zero, over and over again because they do work. They work. But they work at the right time for specific reasons when everything else lines up correctly as I'm sort of piecing all of this together and letting you know what I'm going through. So at that moment, I just say to myself, okay, well, it's just too early. It's just too early. I know what day it is. I don't think it's going to go very far. I can see why it would probably move around like this. I'm just going to leave this one alone. It doesn't mean that there isn't another currency pair that would move considerably. That's not what I'm saying here at all. I'm just saying we're just isolating and sort of analyzing the euro dollar by itself. And you can see what happened a little while later. It only moved down as low as 77. Now, some people would probably argue, okay, well, that was a great trade. I got in, I got 3 points. Well, but I'm not interested in scalping. I'm not going to do that. That's not because you don't know that it's going to stop at 77. Psychological levels repeat all of the time if you do it correctly, and they provide really good profit targets, really good. I mean, the time invested in trading, looking for the setup, and then waiting for it to move to that level, getting 27 to 30 pips or 17 pips, that's a pretty decent trade in a relatively small trading range for the day. That's not too bad, as long as it's executed correctly and you're doing it at the right time. So again, I'm thinking as I see these patterns set up, it's just too early. It's just too early. It's just too early. I see the setups. It's just too early. And then it turns around and goes right back the opposite direction. Well, maybe at this point, we could look at this candle and we could see that it's, engulfing the previous 4 candles there. We know what's going on. We can see this type of pattern, maybe it finding its support level here, but it's sitting at the double zero psychological level now at this time. So right now it's sitting up here at the, or close to the 1.1800 level. So I want to be careful. It's something that I need to be paying attention to. It may cap price right here, and then it might drop right back down again. Maybe I'll get a trade later in the day. Maybe I won't get a trade at all on this pair. Later in the day, meaning 11 o'clock, 12 o'clock, 1 o'clock New York time. Again, right now it's about 9:15 New York time. So I have a ways to go, or I may not get an opportunity here at all. So there is a little bit of movement, but it is in a relatively tight range. And if I see an entry, but I can't determine the take profit level that price is likely to move there, and it has enough momentum, then I'm just staying out of the way. If it goes to the 50, if it dropped all the way down here to the 50 and I was wrong, well, then I'm out and I sit and I watch and I use it as a learning opportunity. And I try to figure out what was it that caused price to move that I missed. That's all I need to look for. And then try not to make the same mistake again. But I need to be right 100% of the time. I know I'm going to have some failed trades, but I've got to do everything I possibly can to control my behavior, my decision. And this is what I go through. This is some of the things that I go through on a day like today. The next day will be different, right? We've got FOMC this week. We've got a lot of things that are probably going to provide some opportunities. When I say probably is that, not every economic announcement, not every economic report is tradable. Sometimes, you get no reaction. Sometimes you get a big reaction. Sometimes you get a reaction before. Sometimes it takes a little while. Every time it's going to be a little bit different, but you've got to wait and follow. I refer to very often trading like hunting, right? You're stalking, waiting, looking for a trade, waiting for it to come in your crosshairs, and then you execute. It's not a matter of just running and running and running and chasing it up and down. You're going to get tired. You're going to make a lot of mistakes. It's hard to focus like that. It's hard to get it in sight and to execute correctly. So I'll be watching this. Maybe it'll drop back down. Maybe I'll get an opportunity. I'm not really too sure. The other one here was the dollar yen. The dollar yen looks tempting, but at the same time, it's not really working out. And I drew this in here because I knew some people are looking for this because I make comments every once in a while and I make videos about this ghost pattern here. So I want to talk about that ghost pattern. You can see that there is a head and shoulders pattern here in the CCI. But as I've said before, I don't trade every ghost pattern. I'd like to trade it with the news. I want to use confirmation. I want to look for more sources of confirmation. I want to know if price is going to top out, if it's going to bottom, if it's bottoming out at a certain level, it's going to bounce, whatever it is that I'm trying to do, whether I'm trying to sell it or buy it. And I need as much information, as much confirmation as I can possibly gather. Whether it's economic data, technical levels, volume, all of that. And in a situation like this, again, thinking that one thought earlier in the day, it's just too early. I could see this developing hours ago during the New York London session, where it looked like it was topping out here, but it just doesn't look like it has enough momentum to bother getting into the trade, only to see it drop maybe 5, 6, 7, 9 points and then stop and bounce and turn around and go right back up again and then sit there and babysit it for the next 8 hours as we lead into the Asian session. It's just, there's no point. There's no point in putting as much money as I do on my trades on the line, or your money on the line, and tie up capital when I could do other things, whether it's look for another currency pair and wait for some economic data that might have a reaction there, or just simply take care, right? Take care of myself, make sure that I'm refreshed, make sure that I'm ready for the next trading opportunity, walk away from the charts knowing that today being the possible where it could create that possible typical Monday scenario, and knowing that there just isn't enough volume. Things are really tight. As I mentioned, stock market's about to open in about 10 minutes. Things are in a relatively narrow, flat range. Maybe a whole lot isn't really going to happen in the beginning here. Maybe it's going to take a few hours. Maybe it's not going to really do a whole lot. It's just going to be a flat day anyway. It's possible. So I just need to follow along. And again, I'm making this decision when I get into the trade. It's not just the technicals. It's not just the trade. So if we go back over here to the euro dollar, it's not just about seeing a candle pattern and then looking at the indicators and then jumping in. Now, see, I did that in the beginning of my trading career, and a lot of my trades would fail. And I would wonder, why isn't it working? Why don't these candle patterns work? But there's more to candle patterns than just trading the candle patterns. Yes, it's possible that you could just trade candle patterns all by themselves, not pay attention to the news, and make some money. But to make money consistently and to work through your trades so that you can eliminate some of those failed trades, it's a matter of paying attention to the rest of the market. It's a matter of paying attention to the things that I've been discussing here, what I use as additional sources of confirmation to determine, is it even worth it, and will it even, and is it even likely to move significantly to a expected take profit target. I use the 20, the 50, the 80, and the 00 psychological levels all of the time. I always have, and I do that especially if I'm trading inside of these tight consolidation ranges. Overall, if we look here at the euro dollar, going back to last week, we've got last week's high and then that pullback there on Friday. I'm trading inside of that range right there, and I need to be careful. And this is the kind of behavior and the patterns that I would expect to see inside of consolidation when it's not at the significant resistance level or at a support level. It's stuck right relatively in the middle of that range. So it's a matter of, the next opportunity would be maybe to wait for price to approach either resistance and trade the bounce or the breakout, or support here and do the same, just in the opposite direction. Those are just some opportunities. The other one that moved was the pound dollar. Now, I talk about trading the pound dollar with the trade copier, and one of the things that concerns a lot of my subscribers is that, and they know this because they've tried it with other signal services, is that a lot of people will try to scalp the news. And while I might see a pretty consistent pip spread and no price freezing on my platform, on my MetaTrader platform, it is possible that you may not, that your broker may be freezing the price feed. And all of my subscribers are using many different brokers, FX brokers, and I cannot possibly see all of the data that they see. I can't see if their price feeds and their platforms are freezing, if their brokers are widening the spread. I've got, numerous videos during economic announcements where a lot of FX brokers were widening the spread, even on the euro dollar, to like 14, 15, 17 pips. Just insane numbers. And it doesn't make any sense to try to trade the split second that economic data is released. Very often, and I used to do that. I used to scalp, or not necessarily scalp, but I would trade the news where I would jump in the split second I heard the news, and I got really good at it. But I lost a lot of money in the process of learning how to get really good at it, and it's not overall worth it, in my opinion. It can be done, and it can be done for a while, but there are going to be some considerable losses occasionally, because sometimes you just can't control and you can't determine what your broker is going to do. That price feed might freeze. You may not get the fill you want. News, if you get in a little bit too late, but you saw what you saw at that moment and they didn't fill you at that moment, and then there's, let's say, a revision to non-farm payrolls afterwards, and the market turns around and spins around the opposite direction, maybe you have the reaction time quick enough to get out of that situation, but they may not close your order and get you out of the trade fast enough. Your broker, they may not process the orders. And that's what I mean is that your behavior, you can control your behavior, but you can't control the platform. You can't control the technology. And there are just too many possibilities where things can go wrong that I have no control over. And that's why I don't jump in the split second that economic data is released. And it's also a good thing because of what I mentioned in the beginning here a moment ago, talking about that all of my subscribers are using different brokers and they see different things than I do at that moment that the news is released. So again, while I might be able to get into the trade and control it, you might see totally different results. So that's why I do not do it that way. I don't trade the split second news is released. I wait for candle patterns, which gives me time really to analyze the data, number one. And number two, it also allows for enough time to pass where the pip spreads, if they have been widened to an insane number, they're going to come back to a more normal pip spread. And then it's going to be a lot more reliable, and it's going to be a lot easier to get into the trade and have all of my subscribers get filled at just about the same location that I'm at, that I'm getting into the trade. And I can control the trade for you then at that point, trading the news that way. So going back to the pound dollar here, a majority of this move, if you go to a 1 hour time frame, a majority of this move all took place in the first minute, and there really wasn't any way for me to jump into the trade at that time. As much as I wanted to take it, as much as I could see what was happening, and I was prepared for the data, I just couldn't take it with the trade copier, and it's just not a good idea. There are too many opportunities. There are just way too many opportunities for another trade that's going to be a lot safer, that will pay just as much. So the bottom line is I stayed away from this one, waiting to see if price was going to continue and then eventually print a continuation signal candle, which it appears to have done a few hours later, 2 hours later, after economic data this morning for the UK, and then it stalled, and it really hasn't gone down any lower. Now, this is a range of consolidation from last week. This is the 1 hour time frame, and everything, for the most part, lined up correctly the way I need it to on that signal candle for the continuation breakout trade. The reason that I didn't sell it is that I don't have the 3 pip entry yet. I have a specific entry on these continuation breakout trades that prevents me from getting into a situation where I just jump in because I see the signal and then it turns around and goes right back up the opposite direction. And it may not ever go any lower. It's possible. It could just, come back up here and take out last week's high. That's a possibility. I don't know that. I'm not predicting anything, but what I'm saying is the continuation breakout trade, that technique that I developed, I started jumping in when I created this technique when I saw the signal candles. As soon as it closed, I got in. I tested it, right? I needed to figure out what to do next once I was able to determine the consolidation ranges and then the breakouts and why they break out, all of that. And then I realized that sometimes in a situation like this, I'll open up the charts. In a situation just like this, it'll print a continuation signal candle, and then sometimes it'll just turn around and go right back up the opposite direction. And I would get into the trade. I was already into the trade, and it would be another head fake. So then I had to go back to work and I had to figure out, well, how do I prevent myself from getting into these head fakes? And then what I realized is if the trend's going to continue and it's going to move significantly lower in the direction of the breakout, then I probably need to wait for price to take out the low of the signal candle. And that's how I developed the 3 pip entry. And the 3 pip entry keeps me out of trouble. It prevents me from going short when price is just going to bounce and turn around and go right back up the opposite direction. However, I'm not in this trade going long either. I could if I suspected, and this did not print a continuation breakout trade, and I would probably look for signs of a bounce. But at this point, I'm not really too sure how far this one's going to go anyway. This has gone up about 15 points. I don't even know that it's going to go up here to the 3,400 level. It could, and it most likely would if there's enough momentum. But we're getting really close here, and I just, overall, you can see we're trading right inside of these price swings, this consolidation. And again, and I repeat this quite a bit, is that inside of consolidation, I'm going to trade less. I'm going to be more cautious. That's when people usually lose more money, that usually. So that's why I want to be, really careful. This consolidation range has gone on for quite a few days. This is Friday. This is Thursday of last week. This has been in place for quite some time. These candle patterns are not, I see the patterns and I see the possible signals, but I don't know how far they're going to go. There just isn't enough momentum. When it breaks out of this range with a lot of volume, economic data, things like that, then I'm more likely to get into the trade and consider it. But again, I want to know when I get into the trade, is there enough momentum and enough volume to expect that price is going to continue in the direction or to the target that I have based on the technique that I'm using. This is not an HL30. This is a continuation breakout trade. I'm expecting, if it works, a possible 55 pip take profit on this one. And if it's not going to line up right, and I don't think it's going to drop 55 pips, then I'm going to stay away from it. I'm just going to leave it alone, and I'm going to look for clues to determine, is there the possibility that it's going to continue in this tight range? Is it possible that this range will get that the price ranges will become tighter and tighter? Why? How long is that going to last? And where can I determine the breakout based on those tight consolidation ranges, those highs and those lows? So at this point, I can't rule out that price would not come back down here and give me my 3 pip entry. That is a possibility. I don't know for sure. And if and when it does come down here, you can see I got a price alert right there. I'll analyze it. I'll analyze the rest of the market to see if it's just going to come down here and stall. That's, again, one more time, when you see a signal like this, it doesn't mean get in right away just because. You've got to look at the rest of the market. You've got to look at the overall participation levels, meaning volume, how far, how fast is it likely to go? Are you just going to end up getting into a trade where it reverses and you're negative 20, 30 pips and you don't know what to do with it and you're watching it for, I call it babysitting a trade, 8, 9, 10, 12 hours. Those are exhausting trades. And very often what happens in a situation like that is you're sitting there watching it when it's doing nothing. You could have prevented getting into the trade, and you're tired when it actually does break out and there is a lot of momentum and movement, and you can't make a good decision. And you don't want to do that. You want to be fresh. You want to be ready to take it on and to do your job when the market's going to provide the better opportunities. Looking at the calendar, the economic calendar, I can go through the list and say, okay, well, if this is just going to be a relatively tight, sideways, slow moving trading day, then I'm just going to look for a better opportunity. Where are the better opportunities likely to happen? And then I'll watch the news leading up to those particular events, which economic reports are likely to produce a little bit of movement or a bigger opportunity. Those are the trades I'd like to prepare for. The going back over here to the dollar yen, still, it's just, again, I still think it's a little bit too early, but again, the stock market just opened. So we've got a long ways to go. So looking at, we're looking at the dollar yen right now, 1 hour time frame. So if we go back over here to the Japanese yen futures, I see volume levels, but they're really not doing a whole lot right here. We've got, I don't see any reason to expect that price is going to turn around and take off and give me a trending move today. I don't see the news. I don't see the volume. I don't see, I see that there's going to be some movement, but I'm talking about a trending move where I would expect 50, 60, 70 pips out of a trade like this today. Again, I'm going to be really careful here. I want to trade this very, very cautiously. I just don't see the Japanese yen futures. I'm sorry. This is the Japanese yen futures. Right now we're looking at the 1 hour time frame. We go back over here to the dollar, and the dollar is, for the most part, doing the same thing. This is a dollar index. This is MetaTrader, by the way. And this is the 1 hour time frame. So, I put the Fibonacci's just to get a sense of where it was stalling in here, but this is not, I didn't stick this in here to try to find an actual trading opportunity. This is inside a consolidation, and it really wouldn't make a whole lot of sense to use the Fibonacci's inside of that range right now, unless I was going to, some kind of weird small scalping opportunity. That's not what I'm doing here. I just wanted to measure to see where it was going to stop, if it was going to bounce and turn around and go back up again. But then again, we've got to deal with some of these other price swings, these highs and lows from last week. There's a high from Friday right up there, which was pretty much the opposite of what we saw in the euro dollar. Again, this is the dollar index MetaTrader platform. This is the 1 hour time frame. And but overall, I think we're just traveling inside of this tight trading range. I would expect that it's going to find a little support right around here and then maybe turn around and go right back up again. But, does it have the momentum to take out last Friday's high? I'm not sure. I don't think so. But I'll watch. If something comes out, if there's a report or a political statement or something happens, and it gives us that break and that opportunity, and everybody's sitting around just like I am, looking at the charts, waiting for a trade. There's my trade. It's just a matter of being ready for it, and again, not tying up capital and putting it into some of these patterns that look like they're going to go somewhere, and then they roll around and come right back down, and then I'm negative the whole time, and maybe it really hasn't come down to a support low that we would use typically for a stop loss. So we would hold on to a trade, but then you're really severely negative, and then you've got your capital tied up in a trade that you probably could have avoided because you could have or should have been able to determine that it's just probably not going to go anywhere. There's not enough momentum, there's not enough participation to expect price to move significantly right now. So again, waiting, preserving capital, waiting for a better opportunity that's going to give us a bigger move, and then those trades are going to pay a lot faster. That's what I'm looking for. That's what I want. That's what I'm looking for. I don't always get it, but that's what I'm looking for. So that's so far how I'm trading Monday, June 11th, 2018. Again, the stock market's been open for a couple of minutes now, and I don't know that I'll get a trade. And I'll just have to do another update later on and just continue on.